All right. How's everyone doing? Thank you guys for joining. My name is David. I'm a loan officer with Supreme Lending here with Sabrina Vera and Jeffrey Hood.
Hi, David. How are you?
I'm good.
Hello.
Thanks, Jeff.
Good. Sabrina, you're doing good this evening?
Oh, yes, yes. And very excited David offered to do this with us.
Oh, yeah. I'm excited about
It's my pleasure. My pleasure. All right. Let's go ahead and get started.
it. Okay. Is it a good time to buy? Let's see. I do have a little technical difficulty. David Jr., there's a little icon right in the middle of my screen that we're sharing.
Okay.
Saying that the meeting is being recorded, which is perfectly fine, but I couldn't quite, let's see. Hang on, wait a minute. I have some notes here. Is it a good time to buy or sell? The answer is always yes. Because if you need to sell, it's an excellent time to sell. And if you need to buy, it's an excellent time to buy. We have low inventory right now. So as a seller, absolutely, that's in your favor. Is it a good time to buy? Absolutely. This is going to be more of a David question because it's going to relate to interest rates. Interest rates are historically low right now. And I'm going to tell you, when you see it, if you're a first-time home buyer, this is going to be really interesting to you because you're going to see how that interest rate, being as low as it is, actually allows you to afford more home than you probably thought you could. Because I have been here long enough to have seen interest rates astronomically high. So you'll find what a great opportunity this is for you to buy. And for sellers, anytime it's a great opportunity for people to buy, it's a great opportunity for you to sell. Rental prices. Oh my gosh. If any of you out there have been shopping for rental homes, you'll find that they too are in big demand. You'll also find that more times than not, the rental rates are more than your mortgage payment will be. I can't say that's going to happen all the time, but we are finding it happening in a lot of the time. And we have a plan to help. And one of the first things we do in our efforts to help you is we don't tell you how great we are. We ask you what you need and what is prompting this move to sell or to buy, because we want to know what your needs are, and then we can respond in kind. We can take the years of experience that we've gleaned from being in the business and we can put it to use for you. Sabrina Vera, one of the sharpest minds I know, and is also my real estate partner. I'd like for her to join in. She has a lot of experience in this field. Sabrina?
Hi, Jeffrey. All right, let's just talk a little bit about selling right now. Selling right now with the coronavirus and COVID-19, still can sell and buy in this environment. There's been different precautions taken, both in the showings and how we're showing the homes. So whether you're concerned about actually allowing people into your homes, we've got ways to take care of that with Matterport and virtual videos. We've got showing requests that we can put in and make sure that the homes are set up in a manner that help to limit anyone touching it at least an amount of times as possible. We have seen a decline in showings. At the same time, though, with that, we are seeing that the buyers that are out there right now are serious buyers. These are folks that are really in a need to move. And we can walk through the whole process with you and guide you and find out where your comfort zone is, whether you're buying or selling, and how to navigate during these times. And even if you're looking at doing a flip, we can walk you through and figure out where the most bang for your buck is going to be in renovating, whether it's renovating to sell or renovating to flip a home.
Also, if you're buying as an investment property, we can also kind of help you there There is a difference I found over the years when speaking and interacting with with investors, that they renovate differently if they're renting or if they're renting for a flip. So we would be most happy to help you with that as well. And we handle all types of real estate: commercial, land, residential, investment. Am I leaving anything out, Sabrina?
Pretty much anything. If it has to do with real estate, we can give you a hand.
Exactly.
You know, even if it's just become an agent yourself, we can help you with that.
Exactly.
All right, so we're going to put it in the faithful hands of David Fox, and he's going to guide us through the whole loan process and things that you should be aware of.
All right, thank you guys. So this first chart is is kind of a cheat sheet, a little breakdown of the main different programs when it comes to mortgages. Every program has different benefits and things like that. But the main thing when it comes to this is when you're speaking to your loan officer, when you're going through that initial pre-approval process, is just to really break down your wants and needs, whether that be like a low monthly payment, or you want to bring as little as cash to the closing table as possible. Also things like first time, if there's different programs for first time home buyers, there's down payment assistance programs. At Supreme Lending, we offer over 300 different programs. So it's really my best advice would just to explain everything to your loan officer, what's most important for you, so that way he can go in there, or myself can go in there and find a unique program that fits you the best.
That's awesome.
Yes, it is.
Yes, it is.
There's a lot of great programs, and everyone, every program fits someone differently. So there's a program for
because you all have different needs. Yes.
Exactly.
That's
Exactly.
awesome. Mm-hmm.
So this breakdown of how much cash you have to bring up front to buy a house. The total cash to close, what's included in that is your down payment, your closing costs, that's fees like appraisal fees, title fees, things like that. There's prepaids, which go into start your initial escrow account, and your escrow account is once a year, your homeowner's insurance and property taxes are due in one lump sum. But when you're buying a house, you have the option to escrow that, so that you pay a small portion every month. And then when that lump sum is due, your lender can take care of that for you. So the prepaids are what get that account started for you. And then there's discount points, which are optional. Discount point basically just buys down the rate. Well, that goes into what I mentioned earlier. It's just important to explain to your loan officer what's a want versus a need. So in this first scenario on the left over here, I did a conventional loan with a home valued of $300,000. The minimum down payment for conventional loans is 3%. So that's where this $9,000 comes from. The closing costs are usually between 2 and 3%. So in this scenario, we're estimating about $6,000 for closing costs. The prepaids to start at the escrow, $2,000, no discount points. And then your earnest money is a check that you write. It's kind of like a good faith deposit in the home that you like, and you go under contract. It's a deposit saying that you're serious about that. So that earnest money will count towards your closing costs. And then if you have a fantastic agent like Jeffrey or Sabrina, they can help negotiate the seller to pay some closing costs for us. So in this first case scenario, the total cash to close, total cash you have to bring to the closing table up front is $10,000. In the second one, we did an FHA loan with a home value of $225,000. Minimum down payment on FHA loans are 3.5%. So that's where we came up with this figure of $7,875. Closing costs, again, between 2 and 3%. Prepaids, again, for the escrow. And then the earnest money that goes towards your closing costs, and the seller paid closing costs that they pay for, which brings this case scenario, the total cash you have to bring up front to $8,300. But what's really cool is, like I mentioned earlier, how many different programs we have. If upfront money is an issue to you, we offer some down payment assistance programs. One of the more popular ones is called a Chenoa Second. So it's an FHA first loan with a 3.5% down payment and a Chenoa Second mortgage that covers that 3.5% down payment. So in this case scenario on the right, mortgage would cover this $7,875, bringing your total cash to close just shy of $1,000, which is pretty cool because it makes it within reach for a lot of different people. When we talk about your total monthly payment, where your money's going each month, it's called the PITI. So it's the principal and interest. The principal, obviously building equity, paying down your loan, and the interest from your interest rate. Like I mentioned earlier, we can escrow your taxes and insurance to take care of those one lump sums that come once a year. So in this case scenario, a home value of $225,000. We did a 5% down payment, and your principal and interest. I used a interest rate that is, I'm seeing a lot right now. It's pretty common right now. The rates are fantastic. It might actually be even a little bit lower than this, which is, like Jeffrey said, they haven't been this low in the past 30 years. It's crazy. But so your principal and interest in this case scenario comes out to be $959.83. Your taxes, property taxes, $187, and your homeowner's insurance is usually around $1,200 a year, so that'll be $100 a month. PMI is private mortgage insurance. If you put less than 20% down, it's required to get PMI. But in this case scenario, I actually ran a real quote, and the PMI came out to be $85 a month. So the total monthly payment for this $225,000 house came out to be just over $1,300, which I found to be really cool. I live in a 1-bedroom teeny apartment, and I wanted to kind of work backwards. So I used my monthly payment for this tiny apartment and worked backwards to see how much house I could afford if I had bought it. And it was a $225,000 house, which is pretty cool.
I can help you with that.
It is,
Yeah.
it is very cool.
Yeah, I can't wait for my lease to end. I'm going to go buy a house. So a lot of people, when they talk to me, one of the first things I ask is what price range are you looking for? And a lot of people will say, I don't know, how much can I qualify for? So when we look at how much you can qualify for, there's 3 main parts that we're looking at. The first one is the debt ratio. We call it the debt to income ratio. And so what that means is we'll take all of the liabilities on your credit report. So that's stuff like auto loans, credit card, minimum payments on credit cards, things like that. We don't look at, cell phone bills or water bills or anything like that. Only things that are on your credit report. But we'll take that and we'll add your proposed monthly mortgage payment, and then we'll put that against your monthly income. So on conventional loans, the debt ratio would be 45% of all your liabilities against your monthly income, and FHA we can go as high as 55%. Another thing that we look at is the down payment. Every program requires a different minimum down payment, and obviously the bigger down payment you have, the smaller your loan amount will be, and the cheaper your monthly payment will be. So we look at the LTV, which is the loan to value, which is basically the down payment. It's how much money are you putting down. And then we also look at the credit. We look at the liabilities on your credit report as well as your FICO scores. Every program has a different minimum FICO score and requires different things when we talk about credit. And speaking of credit, this is basically how heavy everything is weighted on your credit report or your credit score. Main thing is payment history. The easiest way to build your credit is just paying your bills on time. And then the next is outstanding balances. That has a 30% weight. Length of time is important too. Some people, so at Supreme Lending, we have, it's a cool tool. It's called the What If Simulator. So if I could run your credit and it's not exactly where we need to be, I can go in there and say, well, what if we did this or what if we did that? It's really cool because, you know, a lot of times people will say, well, I'm not ready to buy a house yet. I need to work on my credit first. And they'll end up spending way more money than they needed to. And it takes twice as long when we have the, you know, we have the tools where we can see exactly what we need to do, exactly, you know, how much, what's the cheapest and fastest option, which is really cool.
That is very beneficial, David.
It is.
Very, very.
It's helped a lot lot of people out so
It
far.
takes the guesswork out, folks.
Exactly.
That is I'm impressed. That's an awesome tool to have, and I hope that anyone that's listening to this today will take
Pretty cool. Exactly.
advantage of this.
Yes, definitely.
Yep. Now, you may talk about this later, but I know a lot of people look at Credit Karma to just figure out where their credit score is, but how does that differ from the FICO?
That's a good question. So Credit Karma will give you what's called a consumer report, and it looks a little bit different as a mortgage credit report. Mortgage credit reports, things weigh a little bit heavier, such as like late payments and stuff like that, foreclosures, things in that nature. So, you know, it's important to reach out to your loan officer as soon as possible so you can see your mortgage credit report rather than just working off Credit Karma, because sometimes, you know, they can be 20 to 50 points different in either direction. So you might think that you need to work on your credit when in reality, your mortgage credit is in good shape.
Gotcha. Thank you.
You're welcome. That was a good question. So this is the credit highlights in terms of a mortgage, basically what we're looking at on the credit report. The first one, all borrowers must meet minimum requirements for credit. Some people will come to me and say, my credit score is bad, but I make a lot of money, but my husband has good credit, but he doesn't make a lot of money. If we're going to use the income, we have to use the credit as well. So all borrowers on the loan must meet the minimum requirements. Every different program requires a different minimum FICO score. They also require different minimum trade lines. We look at things like cosigner and authorized user and derogatory credit, such as short sales, foreclosures, or bankruptcies. Every program has a different time frame. Some can be as little as 3 years from a foreclosure or bankruptcy. Some require 7 years. But that just goes back into the thing I said up front. It's to communicate with your loan officer and tell them everything so that we can figure out which program to put you in, what's the best moves to make, and how that, you know, what's the best game plan to go.
Okay. I do have a quick question on that.
Yes.
Especially since we're talking with first-time home buyers who may not even have a lot of credit. Are y'all able to guide them through the process of how to build their credit, like either with cosigner or some other options? Definitely.
I do that all the time. I use that what if simulator to try and figure something out. I'll go back to the slide where it shows length of time. So a lot of times people might have pretty thin credit, and what they need is a major credit card. But if you go apply for a credit card today, a month from now, it's not gonna help your score. You know, you might need 12 months. So I'll tell people that it's an easy fix. You can go be added as an authorized user onto someone's card that's had it for 12 months, and then immediately your score will jump up however many points that was. So there's that what if simulator tool is perfect. I use it all the time. It's so helpful, and we can come up with some pretty creative ways to build your credit as cheaply as possible and as quickly as possible.
Awesome.
I'm really impressed with that what if simulator.
It's awesome. I use it all the time. I probably used it 3 times today already. It's just so helpful. But so talking about the loan process, the first step is the pre-qualification. So, you know, you'll call Jeffrey or Sabrina and you'll tell them that you're thinking about buying a house soon, and they will refer you to me. and this is we'll do the first step, the pre-qualification. We could do it over the phone, and maybe takes 20 or 30 minutes. And basically what it is I'm going to be asking a bunch of questions. Where do you live? Where do you work? Things like that. I'll run your credit. I'll look at the liabilities. This is the step where we can figure out how much you're qualified for or pre-approved for. We can talk about different options, different programs and all that stuff. But we could do it over the phone. When this coronavirus is over, we could do it in person, or you could actually do it online through our website, which is pretty cool. And then once you have that pre-approval letter, I'll send it to you and your agent. And with that letter, you'll be able to go shopping at houses, and you'll be able to make an offer when you find the house that you are, fall in love with. And then once you do make that offer with that pre-approval letter, your agent will, help negotiate things like sales price and closing costs and all that stuff. And then once both parties agree, we go under contract. Now what? So we, at Supreme Lending, we submit the file. We do our underwriting up front. We like to say yes fast, but no faster. And that's because our underwriters don't underwrite to deny loans. If the loan doesn't fit, they're not going to say, this loan is denied, it doesn't work. They'll say, hey, we can't take it like this. We need to try and move this to that and this. And they help us come up with a way to make it work. So we do our underwriting up front. We'll order the appraisal up front to verify that the value of the home is what you're paying for it. We'll do things like verification of employment and rental history, and we'll order a title review to make sure that it's a clean title. And then if there's any conditions that the underwriter needs, the loan processor will reach out to you and help you, get those documents. And most of the times it's simple things like a gift letter if you're getting a gift for the down payment, or your homeowner's insurance declaration page, stuff like that. And then we do the pre-closing audit. We send the closing package to the attorneys, and then we get clear to close. The best 3 words in the world.
Clear to close.
Yes. The elements of the approval. So this is kind of a breakdown of what the underwriter is going to be looking for while underwriting the loan. They're going to be looking at income, with at least a 2-year history of income. And it doesn't mean that you have to be in the same job, same position for 2 years. You could have bounced around, but if you're in the same line of work for at least 2 years, that's acceptable. I even have people that have only been working for 4 months because they were in college before, but they got a degree in their field of work. So we were able to use their college degree as employment history so they could buy a house 4 months into their new job.
Awesome.
Look at assets.
Yeah. That's awesome. That's awesome.
Yeah, it is. I've said it probably 5 times already, but it's just important to talk to your loan officer, talk to them as soon as possible, and just let them know everything about your situation, because we can find some pretty creative ways to make it work. The underwriter will look at the assets, how much money you have saved up in your bank or whatever to have that total cash to close, make sure we have enough there. We'll look at the credit again, all that stuff. We will look at the appraisal, make sure the home is worth what you're paying for, to protect you and to protect the collateral for the lender. Like I mentioned earlier, we'll make sure that the title is clean. There's no liens on the title. And then finally, compliance, just to make sure that everything meets federal guidelines and your loan is good. So this is, we underwrite up front, and then the processor will contact you and get those few rest of the documents that we need, and then we get clear to close. And the final step, my favorite, is the closing. This is where we all get to come together, sign a few documents, and you get the keys to your new house.
It's a very rewarding experience to be there for someone, be it the first time, be it many have bought and sold many times. It's a new experience, even though they've experienced it before, if they have bought and sold. But it's always very exciting, and it's a great feeling. When you say Sabrina,
Absolutely.
yeah. Now Sabrina gets real happy when she brings people together with the right house. I'm just telling you, she gets giddy, and that's a fun thing to watch is when she gets very happy about that. And so, David, you proceed on, and is there anything else we need to cover?
That's all I have, unless you guys had any questions.
Well, I do, and if I know Sabrina well enough, she has a question or two, at least two. And so one of mine is, what is the difference between pre-qualification, being pre-qualified, and pre-approved? And is there steps, or can you just go straight to one or the other?
That's a great question. And on paper, the main difference is pre-qualification is everything the same as the pre-approval process. It's, I'm just asking questions. Where do you live? Where do you work? How much do you make? Stuff like that. But in order to be pre-approved, I'll actually look at your credit report, look at the liabilities, and it's a little bit more solid. Some people are hesitant. They say, I'm not ready to move for another 6 months, so I don't want to do the pre-approval yet. I just want to go through the pre-qualification. But in my experience, I think it's better to get it all out of the way up front as soon as possible. That way, if there is anything we need to work on, we have enough time so that you are ready in 6 months or however long that you're looking for.
I agree with that. And Sabrina, do you want to expand on why it's if you're a buyer and you're out shopping for a home that you just can't live without, why that is a good idea to go ahead and be pre-approved?
The sellers are pretty much expecting it. And the other thing is, you really don't want to go looking out at homes in a range that you're not approved for, and then next thing you know, you fell in love and, well, we can't get that one.
Yeah.
And it helps with your offer. If you're presenting an offer and you're already pre-approved, that shows you're serious. Would you not agree?
It shows you're serious and you're qualified.
Exactly.
So there's not going to be any hiccups. And also, if you have the little Supreme Lending logo on your pre-approval letter, we could close loans in 8 days, which, if you get in a competitive situation with multiple offers, an 8-day closing is almost as good as cash and cash offer. So that's always helpful.
Yeah.
And in a market,
Too many of those though.
and in a market that can be very competitive as it is today, that is very beneficial if it is needed. It's always
Yes.
a great tool to have in your toolbox, I can assure you.
Yes, definitely.
Okay. And Sabrina, what else you got?
I did have another question, but then it ran away.
Well, give yourself just a second.
You were asking me about the other, and then it ran from me. I think, I don't know. Talk for a second, and maybe it'll come back.
Okay, well, I have one for you, David.
Okay.
Now, when we talk about appraisals and credit reports and things like that, when do tell the client, tell the people that are listening when they would need to pay, bring the money for those items?
Okay, that's actually a good question. So those are all included in the closing cost. Like I mentioned earlier, the closing costs end up being about 2 to 3%. The only part of the closing cost you pay up front is that appraisal fee.
Okay.
A couple $100. Everything else you won't pay until the loan closes. So if for some reason it doesn't close, then I think the credit report is only like $33. But if for some reason the loan doesn't close, it's free. You don't have to pay for it. The only thing to pay for before we close is the appraisal.
Awesome. Okay.
You said the appraisal, and I know it varies depending on the type of loan, but approximately how much?
I think it's $495, and it did vary between jumbos and VAs and stuff like that. But with our management company, we actually just kind of struck a deal where we just kept it a flat rate for all appraisals, unless that we need to do a rush. If we're doing like a a very quick closing, then we'll have to rush order that, and it adds like about $100 to it.
Gotcha. Okay. And I remember what my question was. My question was, we always run into, well, I don't want them running my credit because it's going to hit and points are going to come off.
Yes, I'm glad you said that because I run into that all the time too. And mortgage credit inquiries are looked at differently than, say, you know, a bunch of credit cards or something like that. A mortgage is a healthy credit. It's you know, an investment. It's looked at as healthy financial movements for you. And also the CFPB kind of they encourage shopping. They don't want you to feel like you're locked down as soon as you talk with one lender that you have to use them. So once you have your mortgage credit pool for the next 30 days, you could do it. You could talk to 100 different lenders. You could pull it 100 different times, and it'll only show up as one inquiry. But I haven't really seen a big impact from an inquiry. Maybe if you pull it, you know, once every 6 months, but you never close on a loan, that might start to decrease your score. But if you pull it once and close on a loan, I don't see a big impact. If you pull it once and then don't close the loan, it might just be, you know, 1 to 3 points, 1 to 5 points, maybe, nothing big. And that goes away really quickly.
Okay. Thank you.
Well, I'm not sure how much time we have, but if we can't talk on this subject today, maybe later. You were talking about a couple of down payment, first-time home buyers and USDA. Pros and cons of both if you have the availability of both.
Yeah, so every loan has different pros and cons. The first one, USDA, the pro is 0% down. It's a great program. But it's only in rural areas. So it's, you know, you have to make sure that the property is eligible for SDA. It can't be in downtown Woodstock or something like that. We have down payment assistance programs, which if, you know, say you don't have too much money saved up, but you make a lot of money each month and your monthly payment is no issue. We can do one of those down payment assistance programs, keep the cash to close really small, but then we'll have to, your interest rate will be slightly higher and you'll have to pay that second loan off. It's amortized over 30 years again, so maybe it's an extra 30 to 50 bucks a month, but it all just kind of depends on your wish list, I guess.
Okay. And the best way to determine the USDA eligibility is just speak to Sabrina and I, or do they have their own?
I would say speak to you guys. You guys.
Well, that's what I like to think too, but you know, I like to kind of be upfront and honest with everybody. Just say, okay, we'd love for you to use us and help you. But also, I want people to be informed. That's one of our primary concerns here today. To anyone that's listening or watching, we really, I know it sounds cliche, but we are actually in the business to help other people, and we enjoy it. It's a great way for us. It's just a great feeling for us. And so we're hoping today that we have talked about topics that you have found beneficial. So if you do have any questions about the down payment assistance, if you have anything, questions about USDA or just any type of real estate related question, please call me, Jeffrey Hood, 770-639-1715. Sabrina?
Call myself, 678-906-8672. And of course, the lovely David Fox.
Exactly.
Yes, my number is 770-265-2843. I'll be happy to answer any questions you guys might have.
Yes. Thank you so much, David. We really
David, you have been a pleasure, and you have exceeded even my expectations, which I always expect so much out of you because I have dealt with you many times in the past, and I know what to expect. But each time you exceed those expectations, and I can't thank you enough. And Supreme Lending, and I can't thank Keller Williams, Realty Partners out of Woodstock, and my partner, Sabrina Vera, who always keeps me moving forward. So thank you, Sabrina.
Yes, thank you guys.
Jeffrey.
All right, guys. Thank y'all.
Thank you.
All right.